Well, good evening, everybody. We hope you're all well. Mike Smith here, Head of Client Education and Training at Go Markets. I'd like to see you all here for this planned session on AutoChartist Part 2. But we have a little issue going on today. Just let me know you can hear and see me okay. That would be fantastic. That's the first thing. Good evening, Michael. G'day, Stephen. Hi, Shane. So I have a contingency plan. I'm not seeing. G'day, Chris. Thanks, Rachel. Good to see you here, Alison. Hiya. Hey, Rod. Yeah, hi, Don. Hi, Nigel. Thanks. Okay, so yeah, we don't appear to have Ilan here now. It is 5 a.m. And he's in Texas. So Houston, we may have a problem. I'm sure he's as regular as clockwork on sessions that we've done before. So I hope all's okay with him. We'll see if he turns up, because he should have been here by now, obviously. But what we'll do is we'll have a look at the markets, and then I've actually been working on some stuff for an intermediate trading clinic that's coming up on some stuff on trading confidence and beliefs, and I think that will be really useful to have a look at if we don't see Ilan turn up in the meantime, and if that's the case, and as I said, I hope all is okay with him. We'll make sure he comes back, maybe even slip him in for next week's session. So apologies for that, but let's crack on. Let's do what we normally do, have a look at the markets or at the beginning of each session anyway. So I just want to put this, obviously, any views and opinions that you hear are mine only, not representative of Go Markets, represent my trading style and thinking on what's happening. And of course, because of that, bear in mind this is for educational purposes only, and anything that you see or hear, you should do your own due diligence on and treat it as such. Risk management is a critical part of what we do, and arguably if we do get to talk about psychology is probably the biggest risk of all in terms of what's going on in your own head and your interactions with the market. But let's have a look at what's happening in the markets overall. So I've quickly put a slide or two together because I'm that clever. Hey, Ewan, good to see you. Cameron, hi. Christine, hi. Robert. G'day, Alan. Stephen, US dollar is going down again. It is Stephen. So let's crack on. Let's have a look at what's come across the news right now. If we look at the news today, last night, US equity markets, after that close on Monday due to, I think it was Memorial Day, long weekend. Equity markets started off really positive and then just gave up the gains throughout the day and really sort of closed near neutral. Now, part of the reason for that is the market's obviously awaiting some key data out this week. We did have some good numbers come across the wires so far this week, but really it's tomorrow things ramp up because of that public holiday on Monday. The ADP jobs report has been pushed to Thursday, so we'll get that and the weekly jobs on tomorrow, along with a heap of services PMI data over the next few days. And of course, the non-farm payrolls on Friday, which is the big mother of all data points. Today, we've had Australian GDP number came out, which beat expectations. German retail sales quietly were released, and some PPI data out of the Eurozone. So nothing there that's really massive. And we shall... a recording will be available, yes, absolutely. So if you can't make it all, then feel free to have a look, have a listen. Asian markets are mixed. We'll have a look at those. ASX hit all-time highs, over 7,200. That was the key level that the markets were looking at. Let me give you a couple of stocks that look as though they're swinging, if that will be of interest to you. For those of you who trade shares and share CFDs, just type in the questions if that would be useful. Just with a yes, I'll do, and I'll just spend 2 minutes doing that, just a couple of stock picks. Oil popped higher, and it's at 2-year highs following OPEC meeting yesterday. FX majors, FX is really hard to trade at the moment, particularly if you're trading long time frames. It's all in, certainly the majors are all range bound. We are seeing some movement on the minors, but even those are now starting to sort of level off and trade around key levels. We'll have a look at some charts in a moment. And of course, cryptos have been under pressure over the last few weeks, down around about 45% on Bitcoin, and trading around a key level around the 200 MA. We'll have a look at those two. Okay, yeah, I can just pop up a couple of stock picks for you. I know there's quite a few of you trade the share CFDs. For those of you who attended the share CFD clinic, then, the session, there is a clinic on next week, next Tuesday. So just keep an eye out for that. So let's have a look at some stuff around, meat around those bones. So just quickly check in on CNBC, and what's the process I use here, because this is important. So you can see where we closed today. That 7,200 level on the ASX, boosted a little bit by GDP. It was hanging around underneath it before that number came out, and then it crept up. So we saw that, and the Nikkei do well. Kospi was pretty neutral on the back of the Nasdaq last night. China was down a little bit. Oops, there we go. Apologies for that. So that's what happened in Asia. If we look at what's happening in Europe, you can see we're all slightly to the upside. That's simply because European markets closed. Closes about halfway into the US trading session, and so that's a reflection of that. But the economic data's come out okay as well out of Europe. Let's look at that. So if we look at what's happened today, then we'll start with locally with the GDP number. So beat expectations on both points, and we are in positive territory, which is good on the year-on-year figure. You can see it beat it by about 0.5%. Retail sales number out of Germany were a little weak. We'll have a look at the euro in a second. But that's not necessarily a bad thing. If that figure was too hot, we'd be starting to worry about inflation again, which is probably the major market headwind at the moment that sort of is in the background. And we got the PPI numbers out of the Eurozone, which were quite positive. Very little else out today, but as I said, tomorrow things ramp up. We've got locally, we've got PMI data going on. Actually, let's just flip this to a weekly. Give me a second. Just quickly check on whether Elon's here. No, he's not. Okay, we'll persevere. So flicking forward to tomorrow. So we've got in Australia, got the trade balance figures. That's really quite important. And then we've got all this service PMI data coming out. Australia, Eurozone, and the US. But also we've got the, as I said, the ADP employment change, which is often seen as a precursor to the on-farm payrolls out, which is out on Friday, and the weekly again, which is really important. So that's what's coming up. So that could be one of the reasons why the market's in pause. Let's just have a look at some charts. Let's start with the US 500 daily. So we had that record high at the beginning of May, then the pullback, then a double bottom formation, and now we're just trading in the sideways range. We actually tested that record high at the start of yesterday's trading. We'll just pop on an hourly chart. So this was the start of trading yesterday, and then we just sort of fell off, and then we sort of picked up a little bit again towards the back end, and that's why those European markets or European futures are up, and why the European markets are slightly up. Since then, it's really sort of flatlined during the day. There's not much action going on there at all. We are higher than Asian Open, so we are pointing slightly positive. We look at the futures. These have got better of late. You can see that these spent most of the day in negative territory. You can see there's starting to be a little bit of positivity on the Dow. S&P's worked its way back up to nearly neutral. You can see the strength of the USD today on that equity weakness. And because of that, of course, we're seeing gold and silver drop off a little bit. 1900 is absolutely critical. Copper's having a little bit of a pullback at the moment, and the VIX suggesting the market is quite mellow with where things are. No real anxiety there kicking along at all. So that's essentially where markets are at the moment. So let's look at these on a chart point of view. There's the ASX futures contract. You can see that is closed at record high over that 17,200 level. US dollar index is trading within a tight range, and this is important because this is influencing all of the majors, but you can see it's in a range that it's been now in for 2 weeks, and we are sort of seeing very little in the way of positive movement. We are pushing towards the top end of that, which is interesting. One wonders where the bond yields are starting to rise. Let me just double check. The 10-year note isn't moving a lot. In fact, it's moving up, which suggests yields may be even softer. And consequently, we've got gold hanging on to 1900. We've got silver failing to break resistance because of that USD strength for right now. And in fact, silver's been in a range now for, again, a couple of weeks based on that. There's the Brent contract. You can see this is having a little boost again to its highs of the day. So this is a 2-year high on this. So back to pre-pandemic levels on Brent. OPEC met yesterday, and that was in a response to that. It already made its way back up to that $70 key level. So that could be interesting if trading oil directly, if of course trading oil stocks. Let's look at some FX majors. We can see the Euro, USD. So it's USD strength rather than anything specifically that's driving the euro down. But you can see we've been in this trading range now again for quite some time, mirroring what's happening to the US dollar index. Of course, the euro makes up around about 55% of that. But we're trading towards the bottom of that range, and that's interesting. Let's pop it on a 30-minute chart. So we can see this dropping off. And if you've been on the ball, there was a nice short-term trade to be had, because that's where the money is at the moment in the short-term 30-minute, hourly, and maybe 15-minute charts as well. But you can see how close that key level is at 121.65-ish, say. So if we're going to break through that, which we've tested already, that could be interesting, because we have got a little distance to be made up here before we hit next key level, which is probably around that level, which is around about 50 pips. So if we sort of put a little line on that, where it might get down to, then we can sort of start to create a little sort of plan for how we might trade this if it does break that level. But again, it's short-term scalping. You've got to be nimble in this market. Look at US yen. We're trading towards the top of the range. So again, despite the fact this has been range bound really since the beginning of April, we're looking to test that. And if we do break this level here, then again, we're sort of looking at 82 pips to the upside. We did have a 4A above it. So if we break that pivot high there, we're in 30 pips in the first instance. Again, you need to be nimble on this. Okay, right. Okay, let's just quickly, nope, no sign of it on yet. That's unfortunate. Means you'll just have to put it with me, guys, okay? So outside of that, so the opportunities maybe in the minors. Look at the euro yen. This is interesting on the hourly chart. We are at a key level here. You can see there, that's the level we're interested in. And so this is actually our FX pick of right now to keep an eye on. And put it in the context of the daily chart. You can see we've hit a high, but we are potentially due for a bounce. We've not moved higher than that. So you can see that there is potential to the downside there. If we just change that color so we can just differentiate it on the hourly chart, put it in green. Back to the, actually, let's make it a 30-minute, let's put it in an hourly chart, actually. So there's that line we're looking at in terms of next key level. And you can see why this was the breakout level when it moved up to that point. So again, we've got around about a 40 pip potential movement on that. So keep an eye on euro yen. You can see that it's possibly euro weakness rather than yen weakness, because the GB pound yen hasn't moved. In fact, the GB pound is looking relatively strong against the yen. But you can see it's pushed up against resistance here. But quite a bit of noise here. So this wouldn't be a chart that would have me jumping up and down with potential entry joy. It's sort of stuck here a little bit. So we may get some choppiness around in a range of possibly only about 18 or 20 pips. So better opportunities elsewhere. So that's Forex covered. I did promise to put up a couple of stock picks. I like this. I like Aluka a lot. It tested the 200 MA. We actually traded this in our sort of daily live market update, which if you don't attend, I'll give you the link for before we finish tonight. But you can see after that sharp move, I was stuck around 750 for ages, around here and here, broke through that 200 MA and then shot up in excess of 16%, then had that pullback. This was an earnings drop, but you can see now we're closing this gap. So this was our chart of the day for today on ASX share CFDs. So you can see if it closes that gap, we could be back up to test this 870 level. So in terms of what that means, there's probably about 8% up in that that we're interested. Now we've been banging on about lithium-based stocks, so I'll give you another one to keep another two to keep an eye on. The two that are important in this space in Australia, Galaxy. So you can see we're moving back up to all-time highs at 415 there, and the one that actually looks more tasty is PLS. So we're looking really for a break of that. We had 148 above it, which was a very dodgy candle. Perhaps maybe even for conservative investors, maybe look to see a 135 break. That will be the more technically strong entry on that. So there's a couple to watch on the ASX. You want one to watch on the US before we finish this section. Then look at Zoom. Okay, so Zoom has traded right up, even though it had a weaker day yesterday. This was pre-earnings. So you can see it's been using the 200 MA as support. Zoom's been struggling to find where it should be really since we started to get in, opening up. And so it's really had a rough few months after breaking all records. Let's just take this back so just so you can see context. So we had this major pullback here once we started to get vaccines and reopening going on. And we found a nice support around where we are now. And the 200 MA is, you know how the market likes the 200 MA. It's been trading in a range really since the beginning of April. We had earnings last night, that boosted it. If we look pre-market at this, sorry if I'm moving a bit quick. If we look pre-market at this, then you can see that it's up 2.8%. I'm actually in a position of this, so that looks quite nice. So that's going to take it to 337. Now 337 on this chart just happens to be where that 200 MA is. So 337 will break that 200 MA. So watch this potentially fly if there's some real buying pressure comes into it. You can see how that would potentially work technically in terms of how far this could move up. If you just break that level, then certainly that is very much on the cards as the first stop point, but maybe even up as high as back towards this 400 level, which I think is probably where is a reasonable price based on some of the figures that came out with our earnings reports last night or after hours. All good, right? Okay. So Michael, okay, so just having a quick look at any of the questions before we sort of move into the stuff. GB Aussie dollar broke higher. Let's look at GB Aussie dollar. You can see how the GB pound is strong there. Let's just so let's look at the hourly chart. So we've got across to the MAs. You put a support level, just put it on a line chart, just help you out in terms of seeing that. There's the key level. So it was support here, a little bit of a pullback to that level before it went down, which you can see how its resistance is. So we've got a nice line in the sand there at 183.09. If we're using the idea that it could break, we'd probably give it 10 pips before we entered this to make sure it had. And then upwards of this, there's probably around about, yep, good call, around about 55, 60 pips in this. So that's not a bad one to keep an eye on too. Good spot, Michael. Okay, so the new session today, let me just do a little bit of, I'm going to have to do a little bit of screen skullduggery to find what I'm looking for. Oh, give me a second. Okay, so what we're going to look at now, and as I said, this is simply because I've been working on this for a future presentation. So if we look at how trading results occur, and we've put this up a few times over the last few weeks when we've been doing inner circle sessions, as really a precursor and what I would call trading IQ. So we get what's happening in the market, which is essentially what we've just been doing now. We've been looking at headwinds, tailwinds, what's moving, what's not moving, what's coming up. That gives us a picture of where the market is now and what to potentially expect going forward. So part of this first, if you like, response to that is to do some interpretation on that, interpretation of risk. So this is what I call market IQ, which would be, so where that would sit at the moment, no major headwinds apart from perhaps the specter of interest rate rises on those bond yields. In terms of tailwinds, we need some more data to justify us continuing to creep up. And we've, of course, got those record highs there. In terms of our next part of how trading results recur and our response is to create systems that actually put that interpretation and make sense of the market action. So that's our trading plan. And obviously within that, we have different strategies that we can use, such as a bounce strategy or a breakout strategy or a reversal strategy that we've talked about before. And then, of course, on top of that, we've got to have the motivation and the will and the volition to follow through and do that, to put those systems in place, to actually sort of then subsequently measure and test what we're doing through journaling, etc. How long did that take, guys? That was quite a while before we mentioned journals. So there's not just your trading plan, but there's all those associated systems that go around it, such as your journaling, such as your time management plan, such as a contingency plan, all that we've talked about before. And then we've got some decision-making action to do. We need to get into the optimum state. We need to control emotions. We need to balance the emotions behind decision-making along with the logic in terms of, well, look, this is what my system tells us to do. This is what the market's doing. So therefore, what does that mean in terms of my decisions? But of course, within that, the ability to follow through on that is a massive part of that, as well as controlling their emotions. And the critical two emotions that are absolutely vital in trading are confidence. So the confidence in not only yourself, but the confidence in your trading system so that you follow it. And of course, commitment to do what you need to do to get the results at the back end, which is, of course, the outcome of a healthy response to markets. So that's the model that we've sort of put forward. So we've got market IQ, we've got system IQ, and we've got decision-making IQ, if you like. So when we explore trading psychology, and this is why 80% of your results are due to what goes on between your ears, not what you're seeing in the market. It's all of the cognitive, emotional, and behavioral aspects that we need to consider. But as I said, in terms of the emotion, there's our three intelligences, just to sort of reinforce the market IQ, system IQ, and decision-making IQ that ties in with that model or that framework we've just put down. Now, in terms of our systems that we use, then we've talked before about our 4 key systems: our primary trading system, our behavioral systems, which are the discipline to follow through on what we should do, our measuring systems, which not only sort of benchmark how we're doing right now, but also the impact of different parameters of our trading plan, and our 3 subsystems: our entry, our capital risk, and our profit risk subsystems. And then subsequently, of course, we've got our refinement or our intervention systems, which are how we grow as a trader, how we make that trading plan into something that's individual for us. So as a result of that, we need to decide, well, what we're going to work on. We've talked before about profit risk and trail stop, having a trail stop strategy, planting your flag in it, and then comparing it against potential other alternatives. And then we feed back that into our primary trading system. What that does is it creates evidence in what we're doing, and then that evidence-based trading plan is something that's based on our reality, trading our vehicles, trading our timeframes, and is going to be far, far more successful than if you drag a system off an expert and just try to trade that, which is all great as a start point, because you do need to plant your flag and have something to start to trade, but your ultimate goal should be to develop something that's individual. And I'm not going to spend a lot of time talking about psychology of results, but really it's the results that are our major drivers. That's the way we're wired to think, and whichever way you slice it, it is important. And this is not only what our overall account value is and what the individual PL of any specific trade is, but also key numbers such as win-loss ratios, such as average win versus average loss. All of those figures are vitally important. But logically, if we set ourselves up as beginner or even intermediate traders as wanting to make a lot of money out of this from the get-go, then we're going to be hugely disappointed. So one of the first mind shifts you might need to make is really viewing, as you develop as a trader, as you grow your system to become an individual, is to use your results as a barometer for how successful that system is and how successful you are following it. If you just start trading a micro lot or 0.01 of a contract in a commodity or an index, then that's the right place to start, because then it's just a case of scaling, and once you scale, you get used to the bigger numbers. So we need to, so one of the things I've suggested before, and we'll probably cover this in more detail later on in another session, is that that's the way you view it. Then you don't get stressed about whether your account is going up or down. You're using your account simply as a vehicle for determining how successful you are at building your system that's going to serve you for a lifetime. I hope that sort of makes some sense. And we also need to balance hope versus expectation. Now, expectation is measured and based on real results and evidence. And from this, we can start to develop some confidence that in a similar set of market circumstances, with a similar vehicle, with a similar time frame, we can expect outcomes. That is all to do with something called reliability. And of course, we need to be measuring the right things, which is where validity comes in. But that's where we need to move to from this situation of hope, where we start off as traders and continue in that place of hope for some time, which is not based on real results or evidence. And so we can't develop the confidence that we need in outcomes. It can result in urgency, in desperation, in ill discipline. The reality is that the more confident that we are, the more likely we are to be disciplined. It's the reality. You think of anything that you do in life, if you know something with relative certainty, then you're more likely to follow through on doing it. If you have doubts, if you have major doubts in terms of what somebody's told you to do, then you're not going to do it. That's the way we function as humans, as adults. So those just some background stuff. And now, what we need to sort of do is we need to look at what I will call 3 trading beliefs. Okay, and belief 1. Let's just move this forward. Come on. Is that you believe you have the ability to do what it takes to be a trader. And what does it do to be the trader? Well, you need to do the learning, you need to develop the systems, you need to implement those systems. So this essentially is, in other words, a confidence in self, or what we term self-efficacy. The second belief is that we're not going to do something unless we think it's going to change our results for the better. So I could bang on, as I do, about journaling, about measuring performance, which is the intermediate trading clinic session this month. So don't miss that. I'll give you the link to that as well. But if you don't believe that doing journaling is going to influence your results positively, you're not going to do it. It's really that simple. So not only do we need to create a weight of evidence in terms of our trading plan and the components of that, but also a weight of evidence around those systems which underpin that development of a trading plan. And then obviously that belief or confidence in a trading system that if we follow them, they're going to produce positive results. So those are the 3 key beliefs that we need to have. Now, just let's look at those in a little more detail. So we'll start with belief that you have the ability to do what needs to be done. So this is what I would call trading self-efficacy or confidence in self. And the best way to do this or have this is what I would term and what the psychological literature terms having mastery experiences. So these are the experiences that we have when we take on new challenges in anything. So to learn that, so in terms of a trail stop system, let's use that as an example. So first of all, we've got to, if we start to use a trail stop system, and therefore what that means is we've learned how to do what a trail stop is, and we've got a rough system that we can do. Now, what that means is it develops within us the ability to feel as though we can develop the systems we need to. Just remember when you're a trader, one of the common excuses people use with some of the stuff that we that are part of a vital part of education is it's too hard. This is too big. But just think of where you are now compared to where you were when you started your trading. Then you have some belief in yourself to be able to learn what you need to learn. Part of this reason this works so well is that we're teaching ourselves that we have this capability to develop the learning, the skills, the systems, and so are an important part of what's called an internal locus of control, which means we feel as though we're in control of what happens in our trading rather than the market being in control, which is where most people live. If you feel in control, you make better decisions. That's a reality. And obviously there's some role for what I would term vicarious experience. I mean, look, I've got 20 years experience doing this, about 13 years educating people in doing it. And so I've learned not only, and I'm passing it on to you, not only the experiences of me as a trader, but also the experiences of many others that I've worked with in the past, not only in a conference or seminar setting, but also on a one-on-one basis. It also suggests that there's it also suggests that there's a role for networking, which we're having a look at the moment, how we can sort of up the game. And if you have that belief in yourself, then that acts as a driver for achievement and motivation. It says, I can do this, so let's do it. Okay, let's try it out. Let's give it a go. Give it a nudge and see what happens. Let's try this journaling stuff. See if it does make a difference or not. And also, it gives you resilience. You look at any book on trading about traders. The Market Wizards is a great series. So see if you can have a look at that at some stage. Time and time again, these guys who really nail it, and there's reasons for this, is that they, you'll hear them talk about how many times they've blown up accounts, but yet we're able to bounce back, get back in the saddle and move. Now, the reason for that is they have what's called a promotional bias. They believe in themselves. They believe that they have the ability, if they get their act together, and act being the kind word of that I'll use on the webinar. If they get that together, and then they have some certainty or some confidence that they can make money out of trading. It's just that they need to get their they need to develop the systems. They need to develop the journal. They need to get rid of those things that are getting in the way. And it's often far, far easier to do that than somebody who bimbles along in the same place for a number of years without doing the education that they need, without creating some real systems. I've got what's called a preventative bias and are pretty good at holding their account around about the same place as it's ever been. Probably enjoy playing with the market a little bit, but never make any money out of it. So usually people in that place haven't got a massive amount of self-efficacy. And so if we look at the threats to this, well, obviously a major threat to this is if you get consistently poor results. If we fail to progress, this is going to significantly impact on our belief as that we have an ability to do what it takes to trade. Now, it may be underneath that we're not actually putting the right things in place. And we can start to, if we have we start to lose that belief in ourselves, then we create what I'm calling an internal I told you so cycle. And so results in less motivation, less follow through, lack of confidence, which creates a lack of discipline, and almost indirectly increases risk and influences potential positive outcomes to the downside. So in terms of this, what you need to do is break that cycle. If you've been in this place where you've just bimbled along and got the same results month after month, year after year, then you need to really push through that resistance. Own where you are now. Take responsibility for it. Acknowledge previous achievement and choosing small goals. Make the big seem less big. Make the complex seem less complex, and break it down into manageable steps. Watch out for Trader IQ, because that's what that's going to do. Actually, that last slide was important. So in terms of practical actions to do this, list those things that give you evidence that you can acquire knowledge. List those systems you've already worked on, and what sort of place they're in now, and list the times, or look at the outcomes when you were disciplined, when you did follow your trading plan, if it is in a good place to follow. So all of these are going to help that feeling of self-efficacy and help you drive forward and do what you need to do. The second one we talked about is stuck. There we go. Is having a belief that some action has the potential to change results. As I said, if you don't believe something's going to happen, then, or something's going to make a difference, you're not going to do it. It can be applied to new knowledge, new systems, or even at a micro level, some subsystems or even indicators. So if I said to you, well, look, you need to watch, if you're trading a trend continuation strategy, which we talked about a couple of weeks ago, then it makes sense to have an indicator which indicates whether something's overbought or oversold, depending on the direction. So it sort of says, so I've given you the logic behind it, but unless you believe it, and the only way you're going to believe it is to test it out on previous results, and the only way you're going to be able to do that is if you've kept a journal and you've followed your trading plan, then you're in a position to make a decision. Now, the good thing about all of this is if you do something once, then you say, hang on a minute, now I've got somewhere some method and some evidence that actually doing this is a useful thing to do. So if we look at the places that we can be in when we're faced with a situation where Mike said something and we don't know whether we believe it or not, well, we're likely to be in one of four places. You're convinced that it's going to make a difference, and that's obviously the most compelling case at all. And the best way to do that is through creating a weight of evidence by actually trying it out. Okay, let me just take a drink. You think it might make a difference. So you hear what I'm saying on a webinar, saying they do this journal, get a trail stop system in place and start to compare it against other trail stop systems. Or you don't think it's going to make it, you think it's unlikely it's going to make a difference, or that you're convinced it won't make a difference. And back to what's important here, you can only be convinced it won't make a difference if you tried it out and it hasn't worked. Now, just a point on that is if you have a trading plan that you're sort of trading or isn't very specific and unambiguous, like again we've talked about before, then it's not the system's fault. It's the fact that you haven't timed it up sufficiently to follow it through consistently. But we can sort of say, well, look, we can add this whiz bang indicator. We can add the parabolic SAR to our chart. It looks very pretty with all these dots on. Okay, we can even find a reason for actually doing it. Whether that reason is valid or not, then now I'm not slagging off the parabolic SAR. I'm actually looking at it at the moment as an alternative to a for exit strategy. But you can sort of put it on and not really sort of commit to actually looking at it properly, and you can be and it's not, you're not actually doing, because you're not measuring the output of it, because you're just doing it on a whim, slapping on a couple of charts, making a decision, does it work or does it not work, based on virtually no evidence at all, then it's not the right way to go about things. So 1 or 4 are both perfectly reasonable places to be. And in fact, taking away indicators is almost as important as adding indicators. Because if you don't have the evidence, you're stuck in opinion. And then we're back to hope. I'm hoping this is right again. So the only way to resolve this is through testing and measuring, or trying and testing if you want. So you've got to give it a fair go, mate. Okay, so that's really where you should be at in terms of anything that you hear that you think, well, look, logically, there's an argument there that this might work. The only way to do it is follow through and test that out. And then, of course, we've got belief or confidence in our trading systems that you'll follow them, they'll produce results. Now, we've talked about this before, but let's get absolutely to the point. So the evolution of trading system confidence is a systematic journey. It's not something you have for the get-go. It's not something that you have from me. It's not something that you have from the guru who suggests you're going to make a gazillion dollars in 5 minutes. It's not something you'll get from the guy who issues trade alerts, or the company that issues trade alerts. Okay, none of that is the case. At the start of our trading journey, we must have the recognition and take action on the development of your 2 key systems, a plan and a journal. Without both of these, you're not going to be successful, period. Okay, because you need to measure trading performance. Although it's reliability to do some back and some forward test, the reality is ultimately we need to plant our flag and then measure the impact of that on our trading barometer, or what happens to our results. So if we have a breakout strategy that says we want a half an ATR breakthrough resistance line, we want increased volume on that, we want the candle to be in the top third, and then we're going to use the 20 EMA as a trail stop. We're going to set the initial stop at 1.5 ATR below our resistance signal line, and we're going to set a profit target, the next resistance above us, and we're going to make that 0.5 ATR from where that resistance line is. So that's what a specific and ambiguous plan looks like. So we can plant our flag in that because that's what you've heard. But then, and only then, and after trading it religiously, can you start to develop that. So the next stage is we move towards a systematic approach, a process of refining that system. So half an ATR, if I change that to 1 ATR, would it make any difference to my results? Would it keep me out of trades that would have otherwise been very successful? Or would it have made absolutely no difference at all? Or would it have actually removed me from trades that weren't successful? But the only way you're going to do that is to have all those other things in place. So you want to be in the top 10% of traders? I'm guessing most of you do. That's what you've got to do. So it's a process. So plant your flag, measure the impact of your plan, and then we move to this refining your plan to fit you as a trader, to find something that's right for you. And the best way to do that is use your result barometer. And then, of course, we can start to scale up. We know if we trade something religiously that we're not only sort of giving ourselves the chance to test the system as it is now, but giving ourselves the chance to refine that system accordingly. You don't do that, you can rub that one from the board and not be in that place where you can move forward. It might sound a little harsh, but it's the reality of stuff. Because if you're not confident in your trading system, what are you going to do? Well, you're going to start maybe taking those profits a bit early because you've had the last 3 trades which have gone against you, and well, look, that one's I'm $100 in profit there. I don't want to lose that as well, so let's just rip it off. Or that stop I've got in place, let's just move it down a little bit, because if I look on the 4-hourly chart, I can see, well, maybe on the 4-hour chart it's not an exit. It is an exit on the hourly chart, which is where I entered it, but on the 4-hourly chart it's not. Or let's have a look at it and see what the next candle does. But if you know with confidence that what you are doing is reliable enough to make over time money in the market, then you're more likely to follow exactly what it says on the can or in your plan. Right at the very early days of when I was teaching and coaching, one of my favorite mantras was have a plan, trade a plan, review a plan. And that hasn't changed, because that's really where it's at. The only thing that was missing out of that was amend your plan, because that should be the purpose of review and closing the circle, you know, but just measuring for measuring's sake. So if you want to evolve trading system confidence, which means you can be disciplined enough to follow it time after time after time after time, and have the opportunity to develop that further to fit you as an individual, that's all to do with confidence. That's all to do with the evidence gathering, and needs to be where you're at. I've absolutely no idea what time it is, so I'm just going to check on that, because I haven't got my watch with me. So let's just have a quick look at that. It must be around about, yeah, we're all right now. So, is this useful, guys? Are you getting some stuff from this? So the reason why most traders fail, you'll have heard all sorts of figures bandied around, like 95% of Forex traders never make any money, or 75% of traders are not successful, or 50% of share traders lose money. The reason this is that they don't have those two primary systems in place. Without it, it's impossible to do well at this game. Does that create, is that a suitable message for you? Do you sort of get where I'm coming from on that? Is the message getting through? Good stuff. Okay, here's a discipline. So this is, so if you like, with any of the things we've been talking about today, any of the subsystems that we're talking about, there's a degree of learning, and so you need the discipline to follow through on that. There's a discipline in systems, so you need to follow through on that, and then there's the execution or the discipline in action. So there's learning acquisition, learning application, and then learning review or system review. So in terms of learning, what's the training style, what options are there, how do I place it on the system? And then you need to develop the system, you need to have the methods to measure success or otherwise of it, and then we need to follow through and record the results of that appropriately, and start to compare and contrast different trail stop systems. So wherever we go, so discipline is merely a symptom, okay? So wherever we go with any part of our trading, it's learning acquisition, learning application, and then review of our actions. Now, I'm not going to cover this, but there are other things that I'm not going to cover it in any detail, but it is worth referencing at this stage. Is you can have the best system in the world, you can have the motivation to do well, you can have all of those things in place that we talk about on a regular basis, and yet your biggest challenge will be the degree to which you're able to put those in action. And the problem is that people come to trading not as completely new blank sheets of paper, but they come to trading with a set of characteristics, a set of personality traits, a set of experiences that they've developed over the years through learning and instruction, and experiences which have become automatic in the subconscious mind. And although many of these factors are outside of a trading context, we bring them into trading with us. And these inbuilt systems are termed cognitive biases, and if they do not serve you well. So we've already mentioned preventative versus promotion bias. That's one of the first ones I would suggest you look at. But what happens is in the heat of the market, when entering or exiting trades, these may kick in and take over from your written and planned trading system. So essentially, they become a major part of your market behavior. So different biases will kick in at different times. There's something called loss aversion, which is all about you're more fearful about taking a loss than you are actually positive about making a profit. There's something called minimalization bias, which means you make decisions based on the merest amount, just the basic information as to what's happening on the chart. Just forget everything else. And even at a more micro level, you make decisions on what's happening on a short-term chart without taking the daily chart into account. So there's all sorts of biases, and we'll cover these in a future session later. But the top 5 are loss aversion recency, is where you judge yourself. This is all to do with self-efficacy. You judge yourself as a trader on the more recent results. Outcome bias is you expect the same thing to happen again that happened before. So the market pulled back 60 days ago, so it's going to do that again. Where in fact everything else about the market is telling you it should be going up. So that tends to be a market IQ issue. And then sunk cost effect is I'm not investing any more time, energy, or effort in this because I'm not making any money. Or money if you pay for courses and all that sort of stuff. So you don't do the work that you need. So you view the work that you've already done as being enough, when actually it's an ongoing process. It's continuous learning. And it may be that you've worked on the wrong things or only worked half on the things and not got the results you want, so therefore you don't do the other half. The number of people who start to do courses, invest invest an awful lot of money often, invest some time at the beginning. I can see through, take the first steps course, for example, and the next steps course. There's 3 modules there, so there's 24 units, and I can see how many times each of those videos is watched. And you see a big number at the start, and then as it goes, people drift off. So people will do maybe a third of the course or a half of the course, or those who are particularly enlightened, maybe even 3/4 of the course. But my guess is that 25% will only complete a full course, and even that's the case when they've paid multiple hundreds or thousands of dollars about it with it. So it's not to do with it being free. I remember Jim Rohn, who was he died a few years ago now. He was a very influential sort of self-development stroke business educator. Absolutely phenomenal. If you ever get a chance to hear some of his stuff, it's awesome. But I remember seeing an interview that he did once, and he reckoned that he could run a seminar that people had paid $5,000 or $10,000 to see for a day, and yet he could virtually guarantee that only 10% of people would be in a different place in a month's time than they were when they attended the seminar, because they didn't follow through on what they chose to do. That's sunk cost effect. I put in some effort, and therefore Jim Rohn, R-O-H-N, is just wonderful. So personal development, business development, he was one of the maybe sort of 20 years ago. So him, Steve Covey, a lot of those, Brian Tracy, a lot of those guys who were really kicking it globally but he is a standout. Worth checking out. Anyway, I just wanted to mention cognitive biases because these are slightly to the side, okay? And if anything that I've said there resonates with you, then it's like anything else you're developing from a mindset point of view. The first step is awareness that these things exist and an ownership of that. So if you find yourself taking profits off when you should be really leaving them alone, and letting profits run, or you find yourself moving your stops because you're scared of losing money, and so what you do is you actually make it worse, or don't let things hit their stop. Or if you find you're making decisions based, you see moving on a chart, let's enter it, boom, you're in, and you don't look at the daily chart to make a decision on an hourly. Look, just to give you a little, I've had a question about this, so I'll follow through on it. I'll just show you what I mean by that. So looking at this, okay, is that a good one to choose? I'm just looking for a good example of this, okay. So there's Bitcoin, okay. So if we look at a 30-minute chart on Bitcoin, we'll see this and we'll say, well, hey, look at that. It's going up, it's beating this, it's a breakout trade, Let's enter this trade. Don't believe I just did that noise. Anyway, it's a breakout trade, let's get into this, okay? Failing to look at the daily chart that says it's just trading around its 200 moving average. This, if it goes, could be down 20% in a heartbeat. So there's an example. So that's minimalization bias when you look at a short-term chart. Minimalization bias is you place a trade, you don't even have a look at the economic data that's coming out, or you don't even look at what So you're taking a share trade, you don't even look at what the index is doing as a whole. You take an index trade and completely on a Friday afternoon, completely ignoring the fact that there's one of the biggest data points of the month coming out in less than 3 hours. That's minimalization bias. So I just wanted to give you an example of that. Now, we've probably used enough time, and I could bang on about this sort of stuff for ages. I'm glad it was a loud and clear message, Alison. And look, it doesn't matter. That reminds me, because I know there's a few of you on here that do EAs, and good on you for doing that. The process, the discipline, the beliefs in what you're doing are absolutely no different whether you're trading EAs or you're doing discretionary trading. You've still got to do the hard work. People sort of sometimes look at EAs from a distance and think, that's rather nice. I'll let the market do the work for me by just plonking a few indicators in an EA. But the amount of measurement, the amount of journaling, the amount of testing, retesting, the amount of putting processes and subsystems in place is absolutely no different, and arguably could be more, because what you're doing is you're giving control away for the rest of the time. So you need to be so on the ball with how markets are performing, or how your EA is performing in particular markets. You still need to look at markets to, in terms of minimalization bias, we've talked about in discretionary. In an EA, minimalization bias is not working out what different market conditions are and then adapting your EAs according to that. So you need those switch on, switch off. If you don't work out, if you don't make an objective way of measuring what market conditions are, then how are you successfully going to develop those switches? So it doesn't matter what sort of trading you're doing. That's obviously an extreme example, EA versus discretionary, but it doesn't matter what vehicle you use and what time frames you use it. The processes are the same. The processes are vitally important, and the processes all start with you and what's in between your ears. So after saying all that, I hope that's been a satisfactory last minute flip in terms of what was supposed to be covered tonight. I'm delighted to see so many of you still here. That's fantastic. How do I feel about EAs? I think EAs can be awesome, but there's work to be done. And you're absolutely right. EA is a constant measurement of what you're doing. So you've got a barometer there in terms of your account size, whether you're talking EAs or discretionary trading again. Again, you should trade small amounts, get that confirmation of reliability of systems, irrespective of what you're trading, and then you can scale higher. Good. I'm glad I've reminded you to do something. Remind you to do something, Alison. That's what attending these sessions are about. So what I want you to do is digest the information we've talked about tonight and maybe make a list of 3 things that you're going to work on for right now. Don't make this a webinar, even though it wasn't what was planned. Don't make this a webinar that you just attend and say, oh, that was interesting. Oh, there was some interesting aha moments there. Make it a webinar that you do something from. So invest 2 minutes after I shut this webinar down, which will be soon, in terms of what you're going to do, what are the actions you're going to take going forward from here. Now, I did promise before you go, there is measuring trading performance. If you're not measuring trading performance well for right now, I'm just going to find. So there's a CFD clinic next Tuesday. Those of you who attended that will be, there we go. So there's 112 registered for that now. I want all of you on that, because what I've been talking about today is absolutely crucial. So this is about journaling. It's about measuring those key numbers. I'll show you my key numbers. I'll give you the how-to list, the how-to guides in terms of how to do all of this stuff, how to do that measurement, how to close the circle and bring it back in. So I'm just going to share this link. I'm going to put it into chat. So make sure you're part of that session, guys. It'll be a game changer. Okay, so there we go. I've sent it there. Now, I also promised I also promised to put the link for, because there's a couple of you said that you wouldn't mind being part of the updates. The next one is tomorrow. So every Tuesday and Thursday, we run a live market update at around about 12:30 p.m. So around about lunchtime in Melbourne. So I'm going to put that in. Lots of positive comments coming through, guys. Thank you very much. So I'm going to put that link in there now as well. So that's tomorrow morning, 12:30. That, and it's a rolling registration. So once you're registered, once you're in. That trading performance is 2 parts. So there's one on the Tuesday and one on the Thursday, I think, from memory. Okay, just see how that euro yen's performing. We looked at this before. Yeah, still stuck around that support. So just hang on to your hats before you take action. Good to hear, Alyssa, that you're trying to get your act inverted commas together. That's wonderful to hear. Rachel, you're so welcome. I was really looking forward to coming across to Melbourne. You guys get yourself uninfected, please, because Mike was going to do Melbourne. I was really going to have some fun and do a live session there and invite you guys that could rock along to that. I miss doing live sessions, and I can only do them in Perth at the minute. So, yeah, so take care of yourselves, eh? Be safe. Thanks, Cameron. Oh, it's a constant pleasure. Look, if any of you want, don't be shy and dropping me an email. Brisbane, not too far away. Liz, awesome, and great to hear that you're making consistent progress. Hope this has helped a little bit. GB pound Aussie. Oh, look, well, that's a very interesting. Okay, so here's a really good example of a bounce strategy. So again, we'll put on the daily chart, get context. So there is our key level that we sort of marked on before. All right, that was a resistance there that it broke through here, and then it sort of bounced up. Now this is today's candle. So just be careful with this. Just be careful. But on this, there is the there's the range it might find its way in now. So this is a failed break. I'll be very reluctant to do this as a daily chart as an uptrend, but you do see that it is reversing downwards. The other thing that sort of, if you're trading this really short term to scalp, there's maybe max 25 pips before it hits some more noise around this level. So yeah, that would be something I would probably even look at on a 5-minute chart on those rare occasions, which I do. But most of the time I would trade FX on 30-minute. A little too intense for my liking. Indices I'll trade on 5 if I'm watching that. Right, okay, guys. Well, look, as I said, make sure. Great to see you back here, Cherry. Fantastic that you've made it along today. Yeah, I know. Didn't record. Oh yes, we did record AutoChartist Part 1. Drop me an email if you didn't attend that session. Marcelo, be glad to send you through the link, as well as the link for tonight if you want. Stephen, you're welcome. You guys take care, stay safe, enjoy the rest of your week, and use the opportunity for something positive. Take something from today and make it happen. Okay, guys, catch you again soon, and thanks for rocking along and staying here. Hey, Ewan, it's not failure, mate. It's feedback. Okay, anything that you've done in the past, you take as motivation to move things forward. So we've all been there. We've all worn that T-shirt. So don't you worry. It's not what's happened before that matters. It's what happens next. Nigel, you're so welcome. Guys, take care. We'll see you again soon. Bye-bye for now.